Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for Tuesday, the 7th of May, 2024. You know, I looked at the markets today, and I keep thinking this. We've had a nice run-up. The markets are probably in an area on this rally in stock indices where we've gotten up to Bollinger Bands in most of the major indices, and we're ready to probably stall a little bit. Why? Well, if you really look at the markets, they began in some cases on Wednesday, starting to rally back as they were getting ready for Friday's reports. You rallied Thursday a bit. Friday was a big day. You know that because you got 175,000 new jobs, nowhere near the 240 the market was looking for. Wage pressures fell an eighth and unemployment went up. A tenth wage pressures fell and unemployment went up the same way. All right, a tenth. So it gave everybody, oh, this is it. This is it. It might well be. We might have reached the inflection point where the market is ready to say that interest rates are finally having the desired effect. Now, you won't hear that from all the Fed talk. Neil Kashkari was on today, and he's still of the opinion we may not get any cuts until 2025. That's possible. If the data starts coming in strong, and this was a one-off and or major revisions to this last jobs report, there'll be problems. No question about it. You push it back. However, if the numbers come in even lower, and even if you had some revision and they're not major, but you drop under 175 or you come in around that number, the market's going to say it's finally here. And those are the things you look for. Now, we still haven't gotten into CPI, PPIs, shelter costs. That's all coming in a little bit. But you've got to take it a step at a time because this was a good impasse. We know that the Fed's going to start trimming the balance sheet, not cutting it as much as they are. They're going to cut back on all that. That's another positive for the market in its own way. So let's take it where we go. As for the earnings in the market, well, we're seeing them come out. You know, you saw Rivian today come out and lost even more money, but they're giving you forward guidance that they think is good. Well, they got to prove that they can do that. We saw today the Qualcomm and Intel were told that they cannot ship any more chips to China for Huawei. That's off. But what about other companies? I read the sanction. I don't know what it means, all right? But certainly the licenses for that are cut off. So the Biden administration makes every move it can to cut off anything to keep China from, if you will, using our technology to advance things for itself. If they can develop it themselves, that's fine. And they're pretty good at that. I think you realize it. I know that President Xi is finishing up his European visit. He was there, I think, for 5 days. He finished up with French President Macron. He's on now to 2 other countries, friends. As soon as he gets to Hungary, this is one of Russia's friends, so he'll be very welcome, and I'm sure that's where you'll hear some trade deals to be signed and things of that nature. Expect that. All right. So you put this all together, and you can sigh a little bit and say, okay, we're over a hump. Now what do I do? And let's go to it. In Home Depot, there's a gap in the chart. Now, there's a gap up here, too. Gaps like to get filled. All right, if you go back on a chart and you look at them, typically they do. You had a gap down here, you came up and filled it, but you left one there. You had one there, and this was called an island. When you have 2 gaps on a chart that aren't filled, it's called an island. And an island you can measure from where it comes in, and I almost flip it over to see where the market might go from the low point, and you probably got pretty close to it, all right? And that's what I think this market is doing. So I'm looking for another gap fill here. It's very rare you get an island formation, but study it because that's what it actually is. When we put the swing line on, which I developed many years ago so I could look at a market and instantly see, is it trending? It is trending up. The definition of an uptrend is higher lows and higher highs. The question is, how do you measure it? My technique that's in my charting course goes higher low, higher high. You'd have to take out right now 329.43 in order to negate the uptrend. Where's the support? the 18-day average of closes, which is now very close to filling in the gap. So you're getting into the neighborhood that I like. I do think the market can fall there to make that attempt in it. And the question is, as it gets there, I think the pros will buy 334 to 336 and a half in the market and not want to see it get under this low. That's what I think they're going to try to do. And momentum-wise, if you're overbought, they won't buy, but you got away from that today. You started arching down. So if it gets there, it'll even be a bit lower, most likely. So that's what I'm thinking the pros are going to try to do. Doesn't mean I'm right, but that's what I think. When we fell down to the lower Bollinger Band here, you know I was on this, and I said, I think the pros are covering shorts. Why? Because you don't stay out of the Bollinger Bands more than 5% of the time. Now, if the bands narrow in like they did here, they have to come out of it one way or the other. But when they're wider, and that's what happens after you get very narrow, they're going to widen one way or the other. When they get wider, then it's a more reliable, all right? You have to break out of sideways action to get everything going. Be careful of Tesla here. If Tesla takes out, in my opinion, 176.02, the odds strongly favor it's going to head back into the 167 level in order to regroup, and that will take it out of the bit of the uptrend that it had off that Chinese news. But as you're hearing other news, it's starting to weigh on this stock, in my opinion, a bit. I still very much like Freeport, but I see the sideways action, don't you? I mean, it's clear. And you heard what I just said to you. So I'm waiting to see which way can it break out. I don't think it's a buy or a sell right here. I think it's more a watch on the daily chart, the daily. On UGA, still bearish, the gasoline fund. Lower highs, lower lows. But now you're at the spot that I think the algo traders, the program traders are going to start covering shorts. Why? First, you're down to the Bollinger Band, but you were down over here. But now you're knocking on the 200-day and the 100-day average of closes, and you're in oversold territory. So could it have more down? It could. Is it high probability? Nope. Is the higher probability that the market's going to try to find a bounce from here, maybe even take out the last rally high, which would negate this downtrend? That's what I'm looking for. You don't hear me saying buy it for that to occur because the trend is down. In XLF, if you can get to the upper Bollinger Band, should have big problems. You're not trending. You have a lower low, a higher high. You're drifting. It's the first time in the past 2 days that you haven't hit the 18-day average almost a week and a half, 2 weeks. So pay attention to that. In XLI, I told my traders today that I thought if you got to the upper band that the pros would start coming out of this market. That's just what I think. I don't see a trend here. I see a lower low, higher high, got to the upper Bollinger Band, and that should be a resistance. In the consumer weighted index, so which way is the consumer? I just read so much I don't know. We saw the debt on credit cards come out this afternoon. So it came out in a rather dramatic drop. So in normal credit, consumer, number 6 instead of the number 16. It's a big number, and we're not getting it. So you're sitting here with the resistance. Does that mean the consumer's tapped out or they've gotten more frugal? That's going to be the argument. In the home builders, this is where I'm looking for resistance. I am not a bear on the home builders. Anybody that's watching this and you think I've been bearish, you know better than that. I've said how smart these guys are. That's all I've been saying. But this is an area where I think profit taking kicks in now. But on the next breakdown, I think you have to look at the market again to be a buyer because they're not through. This is still early May. The season is right now to buy, and then, you know, the home's got to have permits pulled. These guys are called home builders. They can sell you the stock they might have if they've built a couple of homes on spec. But normally, you're talking, if you buy now, it's part of their log book. It could take 6 months or to a year, depending on your region, where they're at before they can start, depending on permits, all that, you deciding the home, the specs, and so on. In the energy sector, now you got down here, and you know what Ira would say to you. Who is that Ira guy? Oh, that's me. You hit that Bollinger Band in an oversold condition. Traders like to cover shorts. And you've got a widened out Bollinger Band. But you're not in a trend. This is just, it's marking time, and you have to understand that. So we get to the gold market. I get friendly in gold if you close over the 18-day average, 216.40. Until that, no, I sit there. There's no trend, up or down. In the silver market, this should be the resistance zone. And silver's been stronger than gold. If you're watching my futures, I've been saying that. And in the copper, I love this one. I still think on pullbacks, you're going to see good buying here, but not right now. You're overbought. So this market either goes up and takes both numbers and embeds and breaks out of this sideways action, or we get another pullback, in my opinion, and the market marks some time. I'm ready for it either way. I think copper's going to be something you want to be in. In TLT, lower and low, higher high, but why not? This and BND rallied up. Why? Interest rates are falling. And these are inversion markets. When they go up, it means rates are coming down. That's what you had. In the dollar, you should have dropped. Why should you have dropped? Oh, let me think about that. The jobs report, interest rates have just gone down in the 10-year from 5% to 4.45. Now I get why it came down, but it's finding its footing on the first challenge of the 200-day average in the Bollinger Band and the flip-flop here. Now you have an outside day down in the euro. That either is a continuation signal or it's a reversal signal. I think it's going to be a reversal signal because it's down, not up. So I'd pay attention to that and see where we get. We're overbought. We'll see how that fits in. You put this all together and you try to come up with game plans. And you know, one of the things we try to do is give you those. Now, I had my staff create for me a new look to all the offerings you get, and they're right here. You know that on our website, when you go to free offers, and this is the computer, and there's the free offers, I scroll through them. But this is what they're talking about. Two different versions of charting software. One is this traditional, you download it, you use it. The other's web-based, all right? So you decide which one you'd want. Access to the price counts for a trial to see what they are. Learn them. I even have a course on them that's in this that you can get from my brokers. Free. And try that. You won't get price counts that I know of on any other piece of software but our QT. Pivot Point video series. Again, free. This is what I use and others use intraday looking, and I do this all the time. I'm looking to come out or looking to get into a market. Is it oversold, overbought? I go to a 15-minute chart, I look at it, and where's my numbers to come in normally? Seasonals with the more research, the booklets on technical indicators that you hear me talk about. And notice it's got a blue area there. When you click the blue, it goes into a cart. You fill out your information, you give it a click. It says, let's get started. The offers come to us, and away you go from there. Could it be easier? IraEpstein.com free offers. There's a cursor up here as well. If you have questions, call my staff. I'm Ira. I'll talk to you tomorrow. Have a great evening.